In this presentation, I am going to describe how you can form the momentum option strategies. And this particular strategy normally used to be formed in the first week of any settlement cycle. Once you are entering to today is the expiry, so tomorrow onwards the strategy means the next month's series will be enabled for the trading. And the next month series starting from tomorrow, which will be having 31st August as the expiry. So here two basic objective of the trader used to be there. Trader never wants to do excessive speculation in the market. You should not do excessive speculation in the market. Limited speculation is allowed. And this momentum option strategies, whenever you are forming, your risk reward must be 1:2 minimum. 1 rupee risk means 2 rupees reward, you should say. So your objective is having two clear ambitions. One, you should do limited speculation, means 5-10 days I will be waiting. Then only I may think of some little bit of oscillations. And my objective should be 1 rupee. If I am putting into the risk, 2 rupees I should earn. So this would be the objective of the strategy formation. So what is the momentum option strategy? Normally when we talk about the momentum option strategy, and this is a very common term, many people will be telling you about this particular momentum option strategies, and this is the time you should take momentum option strategy. So these are the strategies you normally form when you identify the trend is continuing with any major reversal. So if the uptrend is continuing, last month you found out that okay, uptrend has continued for 20 trading days, you can say 10 to 15 days you have given an uptrend, and 5 days was only downtrend days, or the market has, that instrument has closed with a negative return for 5 days and it has given 15 days of positive return. So that you can able to identify very clearly. Whenever the previous month's data, 20 trading days you will be taking. In this 20 trading days, if the majority of the days are giving you the positive outcome, means the instrument closed with a positive gain, and minority of the days it is giving you negative return, so you can say that no major corrections has happened. So in that case we can say that upward momentum is there. Inversely, or the opposite thing is that if 15 days out of 20 trading days are giving you negative return with 5 days are positive return, then you can say that it is a downward momentum is there. So this is how you can identify the momentum of any stock or any future just by introspecting its past 1 month's data. However, many other technical parameters you may think also. So technical part is based on which method you follow, whether you follow moving average, whether you follow WD study, whether you follow one standard deviation. So that studies will be different, and but this is a very layman's understanding. This is the process. So in the majority of days of the trailing 1 month produces positive return, I can say that the momentum is up. So upward momentum is there. So in that kind of market, you should form this momentum option strategy, and it must be initiated in the first week of the any fresh settlement cycle. I'm just taking one example here. I've just taken the Nifty future August. It is trading at 10,145. So when I was drafting this instrument, it was this page. Nifty was trading at 10,145, August month future. So what I will be doing here, so I will be buying this instrument of the August future at 10,145, and I will sell one nearest call option of the second month. So 10,200, 150 strike also comes, but 150 strike is 10,150, slightly illiquid in the September. So I am going for 10,200 200 call option I will be selling at 168. The time I was drafting this, it was trading at 168. And same time you can buy one just in the money or at the money option of the current month, which is August month. So that was trading at 125. So in this case, what happens once you are selling this option, your future is being protected by 168 points, and you have 10,150 put option. 10,150 put option also you have, so to further protect your position. And maximum loss in this case will be some 20 to 25 points. Theoretically, we cannot estimate the profit and loss. The reason is we are selling the September expiry contract, and profit will be 40 to 60 point if you continue for one more cycle of the uptrend, or if you wait for 5 or 10 trading days. So this is because the 100% of time value will not be lost in the September contract, whatever may be the case. But it is being formed with 1:2 risk reward proportion. Same thing if you are going for Bank Nifty, say August future is trading at 25,025. You'll be selling a 25,000 call option of the September. So it is a monthly contract. So you'll be selling at 28 September expiry. So at 525, and you will be buying one 24,700 put option at 250. You can use the weekly option also. So instead of monthly option, so 3rd August you have a expiry, and again you will be having every Thursday you have the expiry for the August. So your first expiry for the weekly contract will be 3rd, 10th, 17th, 24th. So you can think of selling 10th August contract and buying a 3rd August contract to hedge it also. So that also you can implement in the Bank Nifty. So if that 10th August contract is trading, if it is not trading, then you go with the monthly contract, and this will have the similar result. And if you little bit of trend analysis you will do, then it will give you a great result. Suppose if I am going for the trend analysis for Nifty, and I will be just taking the help of our 1 standard deviation coming 10 days period. I am just calculating August series I have taken. So the reference is being drawn at 10,130, and this is the trend it is suggesting. Suppose if I am buying the future at here 10,129, and I am selling 10,200 call option of September expiry. So first let me look into the trend. How the trend will be behaving in this particular case. So if currently it is at 10,130, if it is crossing 10,163, then my first cycle trend is there till 10,300. My second cycle trend will be having a trend till 10,479. So in this case, I don't have any problem because I have a future long. I have sold a call option, but I have sold. It is having 168, means 168 time value I have received. Entire money is in the time value. And I have also 70 to 80 points from here to touch that particular strike. So I have near about 250 points of time value. Out of that, 125 points of time value I have given for buying the put option. So I have a time value balance of 125. So this will be my maximum profit. So I can realize a part of that. In case it trends reverse back. So if the uptrend intact, or the uptrend momentum intact, then there is no issue. If the uptrend momentum ceases down, then it will enter to the downtrend territory once the price fall down to 10,096. Currently it is at 10,129. But this may be a temporary. So if it is falling below 10,019, means the death zone of the Fibonacci retracement, if it is crossing, then I can say that yes, downtrend has confirmed, and it has the first cycle, it will be continuing till 9,956. And once it is entering to the second cycle, it has support till 984748. Since I have hedged with 10,000 150 put option. I have 10,150 put option. So my trade is 10,150 put option of August I have. Put option I have bought. So this is how I am having the trade at 125. So I need not have to worry for this thing because my position is hedged here. And I have sold 10,200 call option of September. Call option of September. So this I sold at 168. And I have a future long. So future also buy. So this is the entire trade I have. So I'll be waiting because I want a limited speculation. Limited speculation I want. So once this second cycle penetrates, once it comes to below 9850, then I may think of for a limited speculation. If it is not falling below this and maintain above that, no need to have any speculation, just wait. So if 9850 also broken, so this confirms that we have entered a prolonged momentum period, we have entered to the downward cycle. If it happens, then it is a time to reverse your trade. So if you are reversing the trade means in that case you will be closing this call option what you have sold, whatever the put options profit you have to take, and whatever the losses the future is giving you have to accept, and you have to form a strategy, similar strategy in the opposite side of the direction. So means you will be buying a future. Instead that time earlier you have bought a future, you have to sell a future, you have to sell a put option of the September at that particular time. So preferably it will be 9,800 put option and you will be buying at 9850 call option. So this you are going to do once the price is falling below this level. If it doesn't fall and it is consolidating and moving in the first cycle itself of the downtrend, then no need to worry. You just keep holding your position for the 10 days period. So by that time you will get great amount of time decay will happen in the September contract and similar amount of time decay can happen in the August contract and you can land in a profit also, small profit. But if it is moving up in upward direction and keeping that upward momentum intact and completes this first cycle, then your profit will not be compromised. Out of this 125 points, at least 40 to 60 points of profit you can enjoy. And the 25 points of loss will incur once the trend completely changes and it comes to the second level. So these particular strategies are only useful for the traders, those who want limited speculation and want a high degree of protection of their capital, same time they wish to earn. So similar one study we can go for the Bank Nifty strategy. You have seen August contract and I am going for positional. So this is the 25,035. So the uptrend gives above 25,094. And if it is continuing, that first cycle of the uptrend will be 25,343, second cycle 25,655, and downtrend similar study we can do. The trend will change if the price fall below 24,534. And I am using the monthly contracts, so I have suggested you to buy the future, buy the future, buy the future, and same time you will be selling 25,000 call option of September expiry, September monthly expiry. So which is 28th of September expiry, 25,000 call option. This will be 540 plus level. It will be trading, and I will be adding one option of my put option. So I have chosen 24,700 put option because this is the level where my trend is changed. 800 below my trend is changing. So I will be taking one 24,700 put option of August monthly expiry. This I will be buying. Preferably it will be 240 rupees. And my momentum strategy I will be holding. Once it is completing the first cycle, I will be booking the profit. And if it is coming down and entering to the trend change zone, which is below 24,534, I'll be changing my index strategy. So this particular strategy gives you a consistent profit with limited speculation if you rely on this particular strategy for a long term period. And in this particular subject, earlier I have given one article how to earn 70% return on your investment per year. Years back, I have given one article how to earn 70% return on your capital employed using the trade. This is per year return. So this particular one strategy, if you follow along with the trend analysis, which is having a very limited scope of speculation in a month, hardly one or two speculation you may do in a month. And if you follow this particular strategy, it has the ability to give you 60 to 70% of return per month with limited speculation, with zero speculation you can say, or limited speculation you can say. And yesterday also I have given one more strategy, similar kind of strategy you can say, buying Nifty, Bank Nifty future, August put and selling a call option of August. Same covered call strategy in the August month itself. And if you look into today's data, it has very much in that profit. You can try to book the profit and come out from the yesterday's strategy. Same strategy, but with a different composition I am presenting you today based on the momentums in the market. So if you are a member of Smart Finance, if you register in our website smartfinance.com, if you register in our website, we always have your information, and this kind of strategies we used to transmit to your email box so that you can get the strategies at your email box. So please register here so that you can get the information about the strategy in your mailbox. Try to follow us in our Facebook and Twitter also. Here too also we give the strategy outcomes. Whatever the strategies we are discussing, that also we give it in the Twitter and Facebook. Try to follow us in the Twitter and Facebook. You can get the video presentations of our strategy discussions and other things in our YouTube channel. Visit this, share this video with your friends, subscribe these videos so that you can be alerted whenever any new video is being uploaded. So be connected with Smart Finance so that we can able to communicate with you. If you are subscribing our video, then any new video we post, it will come to your email box. If you are registering in the website, any strategy we give or weekly trend report analysis we give will be sending to your email box. If you are following us in the Facebook and Twitter, so all the posts given by us, it will land to your Facebook or Twitter account. So many ways you can contact us. In case if you have any further query related to this particular strategy discussions, you can very well send us the email. Visit the contact us link of our website and send us the email. We'll be glad to answer you. And all product related queries, if you want to take up a course in the options and understand how option works, how you can design a zero loss strategy portfolio, how you can protect your money, still you will be earning the money, how you will not be affected with the market's wild movements. So that time you need to learn options. So if you wish to protect your capital to the maximum, same time wish to earn money. If you wish to take some trade positions wherein your interest will not be compromised with the market's wild movement, then option strategy is the only one way. So we have a very authentic course in the options. So three products we have in the options, having different objectives. So different objectives of these three products. So the first product what you are seeing here in our domain option strategy software. In this you get a course which is in the English and Hindi, both medium, and you get an automated software. This costs you 10,500. Suppose if you wish to take up a course and just to practice something, so one manually operated software we have given to practice the strategies along with the same course, this will cost you some 3,000 rupees. And if you wish to take this course along with a pair trade software, option intraday software, option positional software, and you wish to do some pair trade in the futures. So if you wish to take that benefits, then you can go with the product number 9, so which will cost you 8,500. So based on your trade objective, you can decide. Course is same in all three products. Only the component of software varies. One place you have only intraday and positional options tools along with a pair trade feature. Another place you have an option strategy tool, wherein you can form a delta neutral strategy, vega neutral strategy, and other things. And here you do not have a functional automated software. You have a just manual software to test your strategies along with the same course. So you can, if you are a beginner wants to start off, then this will be your best choice. Suppose if you wish to take that, no, I just first want to read and experience something, then you can go with our futures and option book, which costs you few hundreds along with some courier charges and all. So you can see the detail of the courses here, book here. You can read a part of the book also. If you are satisfied with this, you can opt for this book also. So this will be helping you to understand the option instrument in detail. Keep implementing this strategy and give your feedbacks on this particular strategy implementation either by email or through the social media. Thank you.